Okay, guys. I'll switch on the recording. Okay, now let's start. Okay. So guys, today we are going to start the first class of 2024 A levels. Guys, can you all hear me clearly? Please confirm before I start. Can you all hear me clearly? Okay, guys, if there is some problem in connection, unless there are like 4 or 5 students who tell me, I'll assume the connection problem is from your side. Okay, because some students are saying there is connection, they can't hear me. So please make sure you check from your side as well. Okay. So now let's start. So guys, before I start this chapter, yes, that's why. Before I start this chapter, okay, so I just want to tell you about accounting, how is the syllabus and all those stuff. Okay, when you feel like if there is something you want, it's important, and if you want, you can just take a screenshot. Okay, if you feel like you want something in the future, just make sure you take a screenshot. Okay. So guys, see here, first of all, you need to know the syllabus. Okay, so your accounting syllabus, you will have how many chapters? You will have 16 chapters. Okay, total. In total, your accounting syllabus, you have 16 chapters. So these are the names of all 16 chapters. So your grade 12, you will have 10 chapters. Grade 13, you will have 6 chapters. Together, it's 16. Do we have a textbook? Guys, your schools, I mean the government schools or any schools, they are not going to give you textbooks. Usually the private tutors only, they give tutors. So if you ask me in my class, like how do I give it, I just make a book for grade 12 separately, a book for grade 13. So if you join my class, you can get it. I mean, for grade 12 full syllabus, you will have one book, and for grade 13 full syllabus, you will have one book. That's how I usually give. So more like there won't be a lot of questions. Like what I do is mainly it includes the theory part and some questions, and then after that, after every chapter, guys, we will be doing past papers, and I will, if there are extra questions, I will send the PDFs to the group so the students can get it. Okay, no, not given by PDF. It is you will get the hard copy, not the PDF. Okay, so guys, so this is the chapters you need to know. So yeah, after that, guys, I will tell you about your paper, your A-level paper. Yeah, so your A-level paper, guys, it is going to be the structure of your A-level paper. I have to tell you first of all about that. Okay, so just give me 1 minute. Okay, so guys, this is how your A-level paper will be. Okay, you will have 2 parts, part 1, part 2. Okay, so part 1, it's 2-hour paper, and part 2, it's 3 hours. Okay, so part 1, you will have 50 questions. First 30 questions will be MCQ, and the rest of 20 questions will be writing part. Okay, so each question is 4 marks. So 50 into 4, it's 200. Okay, and part 2, you will get 6 questions. Out of that, you have to answer 5 questions. Each question 40 marks. So 5 into 40, 200 marks. So part 1, 200, part 2, 200. So it's going to be totally 400. They will divide it by 4, guys. It's going to be 400. So guys, they will divide it by 4. So then after that, last you will get out of 100. So simply guys, part 1 50 marks, part 2 50 marks. So when it comes to A levels guys, part 1 and part 2 are equally important. Now in your O levels it was like this, right? Part 1 40 marks, part 2 60 marks. So part 2 you had more marks than part 1, but in A levels it's not like that. It's 50-50. Part 1 50 marks, part 2 50 marks, totally 100. So first of all, they will put it for 200, then divide it by 4 and make it 50-50. Clear? So guys, that is the syllabus and your exam structure. So guys, today we will be starting the first chapter, that is going to be accounting and its importance. Okay. Yes, wait, after this session are we supposed to text to Sateha college number and send the receipt? If we are if you're willing to join after this, you can send a message to the Sateha college number. So if you send a message to that number guys, you can just deposit the fees and then send a message with the receipt. You will be added to a WhatsApp group, and then after that you can join the upcoming classes. Okay. Yeah, the usual time for online batch is Tuesdays 4 p.m. So I think guys, we better start the chapter accounting and its importance. So guys, when it comes to A levels, okay, so accounting is like this guys. It's not, most of them are calculations, and it's not theory related, and it's very interesting guys, because if it's theory it's boring, right? So when it comes to accounting guys, it's just that you have to understand the concept and then you apply it. You have to do a lot of questions. That's how you can get good results. Okay, so now see here, we'll start accounting and its importance. If you have a doubt, just put a message in the chat box. I'll try my best to reply for it. Okay, so accounting and its important definition and objective of accounting. Okay, what do you mean by accounting and what is the objective of accounting? Okay guys, in the middle, if I suddenly stop, it's due to a power cut. I'll quickly change the connection and come back. Okay, so don't worry. So now guys, what does accounting mean? Should we write these notes? No guys, you don't have to write these notes. I will send you the PDF so you can just take a printout. Okay, so if you are planning to join to my class, then guys, you don't even have to take a printout. Most probably I will courier it to you. Okay, the hard copy of the full syllabus. Now, what do you mean by accounting? What is the definition? Guys, we say accounting is a process. It's a process of providing information. Because we are trying to provide information to whom? To the stakeholders. Who are stakeholders, guys? The parties who are interested in your business. These are the parties who will get impacted by your decision. That means, guys, when you make a decision, it's going to affect them. When you want to say someone as your stakeholder, that person should be affected by your decision. For example, guys, let's say I tell y'all, guys, suddenly I tell y'all I am going to cancel today's class. Is it going to impact y'all? Make sure y'all answer yes or no. Is it going to impact y'all? If I say I'm going to cancel today's class, yes, right? It's going to impact y'all. So guys, are y'all my stakeholder? If I am the business, are you all my stakeholder? Yes, guys, you are all my stakeholder, because when I make a decision, that's going to impact you. Now, for example, if I suddenly say, okay, for example, if I suddenly say I'm going to increase the monthly fees, I'm going to make it 3,000 per month. Will it affect you all? Is it going to affect y'all? Are y'all going to rethink the decision? Yes, y'all are going to rethink. So guys, see here, then you're all my stakeholders. So remember, stakeholders are the parties who will be interested in your decision, in your business. Because of that, when you make a decision, it's going to impact them. It's going to impact them. So in accounting, guys, we call them stakeholders, we call them interested parties, or even we call them users. All three are same meaning. Okay, so now guys, why do you need to give them information? So that they can make decision. They are not just going to make decision, they are going to make economic decision. Economic, what does economic means? Guys, economic means a decision which will give them best return. They are not just going to make the decision, guys. Economic means the decision that's going to benefit them, that's going to give them more benefits than the cost. You get what I'm saying? So guys, if they ask you what is the definition or what is the objective, both are same. Okay, so now you should answer 3 questions. When you want to give the definition or objective of accounting, make sure you answer 3 questions. What are the 3 questions? First of all, guys, what are you giving them? What? First question you should answer is what? Guys, what are you giving them? Yes, soon tell me. Information. Very good. Guys, you're going to give them information. So the first question you're going to answer is what? What are you giving them? You're giving information. Who are you giving information, guys? Who are you giving information to? Your stakeholders. You're going to give information to your stakeholders. Then the third question, guys, why do you give them information? Why do you give them information? Very good. To make economic decision. To make economic decision. Guys, see, these are the 3 questions you have to answer when you are going to say what is the definition of accounting. Okay, the first thing is you have to say, guys, what are you giving? I am going to give information. To whom? To the stakeholders. Why? So that they can make economic decision. So guys, this is the definition and objective of accounting. So guys, before I go that, I'll first of all tell you economic decision. Okay, yes. So one student wants to know what is economic decision. Economic decision means, guys, the decision which will give them the best return. Okay, that means it is going to benefit them. By making that decision, they are going to get benefited by them. Okay, it's just not a decision they are making. They are going to make an economic decision. A decision which is going to benefit them. Clear? So now, guys, before I go to the next part, I want to tell you all about how to study accounting. Okay, so I usually tell my students, make sure you fill the cup. Okay, make sure you are going to fill your cup. What does cup means? Okay, C means you have to always be consistent. Okay, if you, not only accounting, guys, A levels, any subject, you should first of all be consistent. What does being consistent means? That means, guys, one day you study, the other day you feel, no, I'm not going to study, I'm giving up. You shouldn't be like that. You should make sure if whatever you're doing, even if it's a small thing, you should make sure you do it every single day. Guys, it can be something really small. For example, I'm planning to do every day, I have to do 2 questions. At least 2 questions I have to do. So guys, you have to be consistent. One day you do, the other day you don't do. It's not like that. Okay, so you should make sure you are consistent. And the second thing, guys, you have to understand. Whatever you study, guys, you should make sure that you understand and study. Don't just memorize stuffs. Guys, when you keep on memorizing stuffs, one day you will quickly forget. Okay, memorizing is short term. But when you understand and study, that's going to be long term. Okay, so when you memorize, guys, in the final exam, when you write, when you are stressed, you will forget whatever you memorize. But if you understand and study, guys, no matter you forget, you can still create the answer in your exam hall because you understood what you're studying. And the third thing, guys, practice. You should always practice questions. Okay, no matter how much you know the theory, if you don't know how to apply your theory in the questions, no use. So, guys, you should always make sure you're doing questions, questions, questions. That is the only way which will give you good results. Because, guys, when you keep on doing questions, you understand your mistakes, you try to do better. Next time, okay, you clear, okay, this is why I made a mistake. Okay, now next time I shouldn't do it. This is the correct way to do it. You get what I'm saying? So always make sure you fill your cup. You fill your cup. So when you fill your cup, guys, you can easily get 3 A's in your A levels. You be consistent. That means, guys, whatever you do, you make sure you do it every day. Not one day you do, the other day you forget. And the second one, you study by understanding, not just memorizing. And the third one, you always practice whatever you study. Whatever theory you study, you put it on, you practice so that you know how to answer your question. Clear? Okay. So now, guys, let's continue. Now see here, stakeholders of accounting. Stakeholders, these are the parties who are interested in your business. Okay, so now, guys, you need to know, why do these people need information? Now, for example, I am a teacher. For me, guys, the stakeholder can be students, parents, and, guys, the department, educational department can be my stakeholders based on their whatever decision they are going to make, or whatever I make, it can impact others, right? So we call them stakeholders. Okay, so now, guys, we need to know, now they will ask you in the exam, they will give you a stakeholder and ask you, why do they need information? Why does a stakeholder needs information? So you should be able to answer it. Now, when it comes to stakeholders in accounting, guys, stakeholders are divided into two types: internal and external. Internal stakeholders, guys, they are inside your business. Whoever is inside your business, we call them internal. External stakeholders, these are stakeholders who are outside your business. Now I'll ask you a question. In O levels, you studied honors. Are they internal or external? Honors. Yes, guys, in your O levels you studied, guys, honors are internal. Honors are internal to the business because they are inside the business. Okay. Now, guys, what I'm going to explain is in a company. So in a company, the owners, what do you call the owners in a company? If there is an owner in the company, how do you call them? In a company, guys, an owner is called a shareholder. In a company, owner is called a shareholder. We call an owner, guys, shareholder. These are the parties who have invested money in your business. Okay. Now, if you take a shareholder, guys, can be many. In a company, there can be a lot of shareholders. Now, I'll ask you all a question. Tell me, if I tell all the shareholders can come to the company and make decision, is it right or wrong? In a company, there are a lot of shareholders. I tell, guys, all the shareholders can come to the company and make decision because they are the owner. Is it right or wrong? What do you think? Why do you say wrong, guys? Now, let's say in a company, there are, let's say, 2,000 shareholders. In a company, there are 2,000 shareholders. My question, I'm not telling stakeholder, I'm telling shareholder. Shareholder is the owner who has bought shares in a company. My question is it right to tell all the shareholders to come and make decision in the company? Yeah, that's correct, guys. It's wrong. It's wrong. You can't do that. Guys, in a company, all the shareholders cannot come and make decision in the company. Okay, that's why when it comes to a company, we say shareholders are external to the company. They are not internal. If it's a sole trader is one owner business. If it's a one owner business, yes, owners are internal to the business. Guys, but if it's a company, shareholders are external. I'll tell you why. Guys, just assume in a company, you can have thousands and thousands of shareholders. If all the shareholders come to the company and make different decision, guys, just think, can a company run properly? Can a company run properly? No. So guys, in a company, shareholders, guys, yes, it's not practical. In a company, shareholders are external to the business. Now see here, what will the shareholders do? So I'm talking about a company, okay, not a one owner business. Understand that I'm talking about, yes, I'm talking about a company. So guys, in a company, who are the owners? The owners, we call them shareholders. In a company, the owners are named as shareholders. If you want, you can write this down. Okay, shareholders. Now guys, these shareholders, we call them, these are the owners of a company. Now tell me guys, shareholders, they can't come inside the company. Then who will run the company? There should be someone who is going to run your company, right? If there are no shareholders who can come and make decision, who do you think will make the decision? Very good, very good. We call them, guys, the management. We call them the management. Who will appoint the management? Who will appoint the managers? Now you know that shareholders are the ones who invested in the company, but they cannot actually come and make decision inside the company. So shareholders will appoint board of directors, or we say managers. Now, who appoints these managers or board of directors? We say, guys, board of directors, or we say the management. Who do you think will appoint them? The shareholders. So guys, these shareholders they are the one who is going to appoint. They are the one who is going to appoint this board of directors, or we call them the management. I'll repeat it again. Guys, in a company, the people who invest money in the company are called the shareholders. Shareholders are the owners of a company. So guys, shareholders are the people who is going to appoint the board of directors or the managers. Yes, Milhan, somewhat same. Assume it's somewhat same. Okay. So now, guys, the board of directors and the management, guys, it is appointed by the shareholders. They are the people who have appointed. Why have they appointed? They have appointed them so that they will run the company. They will be responsible for the company. Then only, guys, this board of directors or managers, they will appoint employees. They will appoint employees to do the day-to-day work. Are you all clear? So remember, shareholders are external. We call them, they are external to the business, while managers and employees, they are internal to the business, because they are the one who can come inside the business. So they are the internal parties. Okay. So, Miss, can shareholders fire the board of directors? They cannot just fire the board of directors if the board of directors has done something wrong. Okay, now there is an agreement. Usually every year they will re-elect the directors. Every year in the annual general meeting, they are going to re-elect the directors. Sometimes they will keep the same directors. If they feel like they are not good, they will change them. Okay, so it depends. So now one shareholder cannot just tell, this director I don't like, let him go, nothing like that. Guys, it depends if the director has done something bad. Okay, so then only the shareholders can take him out and put a new director. Okay, so guys, this board of directors or the managers, now for them, then they are the one who is responsible in the company. No, so now they need to do the work. They need to make sure the work is done. To make sure the work is done, they will appoint employees. They will hire employees. So these employees will make sure that they do the work of the company. Okay, so now see here. Yeah. So the people who buy the company shares are called the shareholders. So these ordinary shareholders, they are the one who can vote and appoint directors, and then directors will appoint the employees. They will be taking care of the employees. Clear? I'll ask you all a question. Tell me, guys, what if there is a problem? Let's say an employee did something, or there is a problem. Who will the shareholder ask? Will the shareholder ask the employee or the board of director? The management or the employee? The board of director, guys, because the shareholder appointed the board of director. So the board of directors are the shareholder will ask board of director, because board of director is responsible. Okay, so but then even if the employee does a mistake, board of directors should be responsible and accountable to their shareholders. Clear? Now let's go. See, guys, why do you need information? First of all, we'll study internal parties in a company. We call them management or board of directors. Why do the board of directors need information? Because they are the one who is responsible for all the day-to-day activities. So everyday activities, they have to make decision how to operate the business. They have to make decision how are they going to operate their day-to-day activities. Guys, to operate their day-to-day activities, they have to make decision, day-to-day decision. So for that, they need information, guys. Without information, can they make decision? No. Yes, Farhad. Guys, they cannot make decision without giving information. They need information to make day-to-day decision. Guys, these managers, they are the one who will plan, who will organize, lead, and control the business activities. Guys, they will plan what are they going to do in the future. They are not just going to plan. For example, let's say, now they are planning to do a project. After planning, they are not just going to wait. They have to organize. They have to say, okay, for this project, these are the employees who are responsible. This is the money we are going to allocate for this project. Guys, after they organize, they have to lead the employees. They have to show the right way. They have to tell employees, do this, do that. They should be the leader. And then, guys, they have to control. They should make sure that the employees are doing the right thing. Once in a while, they should control the employees and make sure they are doing the right thing. So, guys, for all these, the managers, they need information to make the right decision. Then guys, employees are also internal to the business. So managers are the one who will appoint employees, right? Managers will appoint employees. So now guys, employees have to do their work. So when they need, why do they need information? Guys, just think you're the employee. And suddenly if the company bankrupts, guys, you will lose your job, right? You will become jobless. Okay. Guys, if they are going to do the work now, suddenly if they lose their job, they will lose the job, right? So for that, they need information. What they do is they will check, is the business earning profit? How is the business cash these days? Are the business having enough cash to pay a salary? So guys, employees will decide whether they are going to stay or whether they are going to leave the company. Because guys, they are scared. What if suddenly the company is shutting down? If the company shuts down, their job is gone. So that's why employees need information. If I was to tell you in 2 words, employees need information for job security, to see whether their job is protected, to see guys whether they have to search another job or they can still stay in this job. Okay, so now guys, these are the reasons why employees will need information. Clear? I will ask questions. Okay, in the middle I'll ask questions, so be ready to answer. Now go to the next one. External parties. Who are the external parties who will need information? I mean, why do they need? First of all, we say investors or shareholders. These are the parties who have already invested in your company. They have already put a lot of money in the company. Now, why do you think they need information? They have already invested money in your company. Guys, they need information to see whether the company is growing. Now, they are the owners. No, guys, if you're an owner of a company, you really want to know whether the company is growing, right? What if tell me guys, what if the company is not growing? What will you do? Yes, very good, Isa. What if the company is not growing? What is the decision you can take? You have already invested. Now, you all are saying, don't invest. No, guys, I'm telling you, you're a shareholder. If you're a shareholder, you have already invested your money. And now see, guys, you see the company is not growing. Very good. Hafsa, Farhad, correct in all others. Okay. And Isa, correct answer. Anisha, correct. Fatima, Rami is correct. Guys, you will sell back the shares. You bought the shares, right? You bought the shares. Now you feel like this company is not doing well. What you will do? You will quickly sell the shares, because guys, you know that in the future, your investment will be worthless. So now you quick buy the information you have. If you see that this company is not growing, what you can do? You can quickly sell the shares which you bought. Oh guys, why do you need information? To check the profitability of the company. Guys, if you're a shareholder, when you buy shares in a company, you become a shareholder. The return the shareholder gets is what you call as dividend. The return the shareholders get is what we call as, guys, dividend. So now the shareholders are really interested to see whether the company can pay them dividend, because that's why they invested to get dividend. Guys, the company will pay dividend only if they earn profit. Now, one student is asking, is dividend an income for the shareholder? Yes, dividend is an income. For the shareholder, dividend is an income. Now, guys, company will pay dividend only if they have profit. So what does the shareholder wants to know? Shareholder wants to know if this company has the ability to make profit. We call it, guys, profitability. What does profitability means? Ability to earn profit. We are trying to check if this company has the ability to earn profit. Okay, miss, the investors will sell their shares once they get the dividend, right? It's like this. If the investor feels like, okay, the company is not doing bad, the investor can sell. If the investor wants, he can sell it after getting the dividend. It depends on him. He can sell it whenever he wants. He can sell whatever he bought. Okay, if he really wants extra money, he can sell it at a higher price and get extra money. Now, that's not the problem here. The problem is the shareholder wants information. You know why? To see if the company is profitable. If the company is profitable only in the future, they can get dividend. Because for a shareholder, their main income by investing in a company is dividend. So they will check if the company has the ability to earn profit. Ability to earn profit. We call it, guys, profitability. If the company has the ability to earn profit, because the shareholder knows if the company has the ability to earn profit, then only they will receive what? They will receive dividend. That's why they want to know. Clear? Now, guys, let's go to the next one. Okay, potential, or we call them future investors. Potential or future investors. Are these people shareholders? Are these people who have already invested in the shares, or they will invest in the future? Guys, can you all hear me now? Can you all hear me? Okay, sorry guys, power cut, I told you. Okay, now guys, see here, who are future or potential investors? These are people who haven't invested yet. They have the money in their hand and they are trying to make a decision whether should I invest or not. Okay, they have the money in their hand and they are planning to make a decision. Okay, should I invest or not? Now, for example, let's say I have 1 lakh in my hand, 1 lakh. Okay, now I like to invest in a garment industry. Okay, in a garment industry. So I have 1 lakh. Now I want to make a decision. Should I invest in company A, company B, or company C? I have 1 lakh in my hand, guys. Now I want to make a decision. Okay, is it better to invest in company A, company B, or company C? So guys, as a future investor, I need information. Why do I need? To see whether should I invest or not. If the company is doing really good, I will invest. If the company is not doing good, I will try to invest in another company. Okay. Yes, Farhad. So now see here, why do the potential or future investors need information to decide whether to invest or not in the business? Okay, up to here, guys, I will give you all 2 minutes. Can you all quickly go through it? And then I'll ask one by one question. You have to be ready to answer. Okay, soon go through it up to what we studied so far. Guys, done? Can I ask all question? Y'all can unmute and answer, right? No, 400, Rinza. The paper is out of 400. They will divide it at last by 4 and make it 100. Okay. Part 1, 200. Part 2, 200. That's how 400. Employees, Razna, these are the people who will work in your company. Employees, they are the ones who are going to do the day-to-day work. The board of directors, guys, the board of directors, they will be telling what to do for the employees, and the employees only will do the final work. Get what I'm saying? Okay. So now, guys, see here, let's continue. Shall I ask you questions now? I hope all of you all are clear. Okay, now I'll ask questions. Okay, you all can unmute and answer when I tell your names. Unmute and answer. Now don't leave the class just because. Okay, don't just unmute, guys. When I tell your name, unmute. Okay. Okay, first of all, I'll ask, who can answer what is accounting? If I ask you what is the definition of accounting, who can answer?
I can.
Okay, so fine. I don't know who told that. Okay, Rishda Fahim, can you unmute and tell me what does accounting means?
Providing information to stakeholders to make economic decisions.
Very good. You provide information to the stakeholders to make economic decision. That's correct. Okay. Razna, can you tell me why do managers need information? Why do managers need information? Be quick, okay?
To make decisions on how to run the business.
Okay, very good. To make decision on day-to-day operation, to run the business. That's correct. Okay, Salman, can you tell me why do employees need information? Guys, you can just answer on your own words, okay? It doesn't have to be 100% like what I thought. Salman?
To stay or leave from the company, job security.
Very good. Yes, very good. To stay or leave. They are going to decide whether to stay or leave the company. Latifa, a shareholder. Why does the shareholder needs information?
To see whether the business is earning profits.
Yeah, why do they need to know whether the business is earning profits? What's the reason?
Yes.
Very good. To receive dividends. That's correct. That's it. Any others who knows the answer? Raise your hand. Because only Farhat. Okay, Farhat, what else? Why do the shareholders need? There is another reason. Can you remember that? Why do shareholders need information? There is one more reason. Izza?
If the company is not earning a profit, then they can sell the shares to someone else.
Okay, very good. Alia, what do you think? There is another thing. Why do the shareholders? That is employees, right? Employees. Guys, for company growth, they need information about company growth. Job security is employees. Okay, to assess company growth, to see whether the company is growing. That's why they need information. Good job, everyone. Okay, next one. Future investors. We call them potential investors. Anyone who didn't answer? Potential investors. Why do potential investors need information? Anyone who didn't answer can answer. Yeah.
To invest.
Yeah, whether to invest or, guys, they need information to see whether to invest or not. They want to know, guys, is it better to invest or not in the company? Okay. Now, guys, let's go to the next one. Government. Why does the government need information? Guys, government is really waiting till you get a profit so that they can charge tax on your profit. Every time you earn a profit, the government will be the first person to ask tax on your profit. Okay, so the government needs information to see, guys, whether you're earning profit. As soon as they find out you're earning profit, they will charge tax on you. Because for the government's main income is taxation. Okay, so they charge on all the businesses. Now, the next one, financial institutions, example, bank, insurance companies, leasing companies, financing companies. You would have seen advertisements in TVs and stuff, right? Where they advertise leasing and finance companies. Okay, so now guys, why do financial institutions need information? Usually these financial institutions, they are the one who provide us finance facilities. Most of the time, guys, they either give you loan or maybe they give you other finance facilities. I will take example. Let's say bank. Guys, bank, why do banks need information? Banks need information so that they can check whether you're able to pay the loan. They are not just going to give loan for anyone who asks, guys. They are not just going to give loan just because you ask them. They will check whether you are able to repay the loan. They are not just going to give anyone who wants. No, they will see, first of all, you have the ability to repay the loan. So they will check how are they generating cash? Are they easily getting cash or are they not getting cash? They will check everything one by one. What else will they check? Guys, just think on bank's point of view. Let's say you're the bank. Okay, let's say you're the bank. Now you want to know whether the business is able to pay you the money or not. For that, what will you check? Very good. So Hansa is saying property. Guys, some banks, they will say, okay, if you have a property, you have to mortgage it. That means based on the property, even if you couldn't pay the loan, at least we can sell your property and get the money back. So that's why they check whether you have a property. Guys, what else will they try to check? No. Don't think you're a person. Think you're a business. You're a business and you need loan. Okay, now some of y'all are saying salary. Guys, you're a business. Business doesn't earn salary, no. You're a business and you want to take loans. Very good. Financial statements. Okay. What else, guys? Now, what about your past history? Past history. What do you want to check? Yes. Okay. So some students are saying if the business information is true, do you want to see whether the business is telling the truth? Okay. So yes, I am asking you, if you are a bank and you want to give a loan to someone, to a business, okay, what do you want to check? Very good. All loans. Guys, you want to see whether the business has taken so many loans. Guys, if there is a business who have already taken a lot of loans, will you like to give that person? Will you like to give a person who have already taken so many loans? No, because you're scared. What if they become bankrupt? That means what if they have to shut down their business? They cannot pay the money because they have already taken a lot of loans. So guys, like that, there are so many things the bank will check before you give loans. So then guys, that's why they need information. The main reason is to see whether you're able to pay them back with interest. Not just the money, you should be able to pay them back with the interest. That is why these loan providers, they need information. And guys, insurance companies, leasing companies. Now, insurance companies are the people who cover your risk. For example, you have an asset and you're scared something will happen to this asset. So you go to the insurance company and cover the risk. So what does the insurance company says? Every month, pay us an amount. We call it insurance premium. And then after that, if let's say your house or your building, you have insured your house or building, and then it gets into a fire, then the insurance company will come and recover you. So like this, there are so many different types of companies. What is bankrupt? Bankrupt means you are shutting down your business. Maybe you have too many loans. You cannot run the business anymore. You have to shut it down fully. We call it bankrupt. You would have heard, right? Business became bankrupt. Okay, where they shut down completely. So now, guys, see here, financial institutions, they need to know, if they want information to see whether you are able to repay the loan. Not only the loan, they want to know whether you can pay the interest as well. Okay, then the next one, in O levels, guys, when you make a credit sales, whom do you create a credit sales? What do you call that person? A credit sales. When you make a credit sales, you call a person, what's his name? A debtor. Very good, guys. When you make a credit sales, we call debtor. In A levels, for the same debtor, we have a new name. We call it trade receivable. Trade receivable. Debtor is what we call as trade receivable. And guys, in O levels, you have credit purchase. When you make a credit purchase, you say creditor. In A levels, you call them what? Trade payable. Trade payable. I just write, if you want, write it down. Okay. So now, guys, these customers are the people who you have sold goods. Okay. You have sold goods to your customers. Now, these customers, what do they need to know about your, why do they need information? Guys, customers need information to see whether the company is able to supply goods and services on a continuous basis. Now, guys, if you are a loyal customer, you really want me to supply the goods and services continuously, right? For example, let's say I am the business. I am providing lecturing services. Now, when you join my 2024 batch, guys, you really want me to teach till the end, right? You want me to teach till the A levels finishes, until you do the exam. So now, you're my customer. You're my customer. Now, why are you interested in information? Why do you need to know about me? You need to know whether I will teach you until you finish your exams. Same like that. Customers, guys, they will always want to see if the company is able to supply the goods and services on a continuous basis, because y'all as a students, guys, you know that if I stop in the middle, it is going to impact y'all. If I stop teaching in the middle, it's going to affect y'all. No, Farhad. That is normal income receivable. Income receivable only, we say accrued income. So now see here, continuous service. Very good. We need y'all as a student. Y'all need to know whether I am going to provide continuous service, because if I stop in the middle, it's going to affect y'all badly. So guys, we call them customers. Trade receivables are the people who you have sold goods on credit. That means you have sold and you have told, the customers have told they will pay you money later. We call them trade receivable. You have sold goods and they are going to pay you money later. We call them trade receivable. Okay, so customers, guys, when you sell goods to the customers, they need information to see whether you have the ability to give a continuous supply of goods and services. Now, what about trade payables? Guys, trade payables are the suppliers you have purchased goods on credit. You have told them you will pay the money later and you have bought goods. You have told them you will pay the money later, okay, and you have bought goods. So why do the trade payables need information? They need to know whether you can pay the money back. You have nicely taken their goods, right? So they are really curious. They want to know whether you are going to pay the money back. Guys, if they understood that you are unable to pay the money, what will they do? As a trade payable, tell me guys, if you feel like, okay, this business is not finding it easy to pay the money, what will you do? Very good, Isa. You want sell on credit. Guys, hereafter, you will tell, it's not like you won't sell, guys. You will sell. But you will tell, listen, I will sell you goods, but not on credit. You have to pay me cash. Because you are not paying me on time, you are always delaying. So what you have to do is you have to pay me on cash. Okay? See guys, see here. I'll repeat it again. Who are trade payables? Trade payables are the suppliers. You have purchased goods on credit. Purchase goods on credit means you have purchased and you are telling that you will pay the money later. See, so because you are going to pay the money later, the suppliers need information to see whether you are having the ability to pay the money. Okay, you are telling that you will pay the money later. So the supplier needs to know whether you are having the ability to pay the money. If the supplier feels like you can't pay the money, what will the supplier do? Here, listen, I can't give you on credit. If you want to buy my goods, pay me cash. Are you clear, dear? Pay me cash. Afifa, are you clear now? Can I continue? Trade receivable is when you sell goods on credit. Trade payable is when you buy goods on credit. Okay. Now, guys, the last one, important. Listen, external auditors. Who are called auditors? I don't know whether you all have heard. Okay, but some of your parents can be auditors. Guys, auditors are the people. Now, I'll ask you again. Who appoints board of directors? Who appoints board of directors? Shareholders. Guys, can the shareholders come whenever they want? Can they come to the company whenever they like? No, they cannot come. They cannot come. Only the managers are going to run the business. The managers will be running the business. Okay, guys, tell me, as a shareholder, will you not get scared? Will you not doubt it's what if the managers do a fraud? What if the managers slowly do something to your money? You're putting so much money in the business, right? So guys, now you're very, very scared. So who do you appoint? Guys, you appoint as a shareholder. You will appoint another person. Whom do you call? You call them auditor. Guys, now you're a shareholder. You're very scared, okay? Whether the board of directors are using your money properly. You have a doubt. So what do? As all the shareholders, they will decide and appoint another person. You call them auditor. Auditor. Now, what does this auditor do? Guys, this auditor at the end of every year, after the board of directors prepare the financial statement, as board of directors are responsible to prepare the financial statement. Okay, the board of directors only will prepare the financial statement. So now they are the one who is responsible to prepare financial statement. So what will the auditors do at the end of the after they prepare the financial statement? Auditors will come to the business and they will check all the financial statement. They are going to go through all the financial statement and see whether the board of directors have done everything properly. Financial statements are like profit or loss. You have statements, right, to find profit or loss, to find what is the total value of asset, liability. You call them financial statements, statement of profit or loss, statement of financial position. These are called financial statements. Okay, yes. Now, guys, who is responsible? If they ask you, who is responsible to prepare financial statement? Who is responsible? Who is responsible to prepare financial statement? The board of directors. Very good. Guys, if they ask you who is responsible to prepare financial statement, board of directors are responsible to prepare financial statement. After the board of directors prepare financial statement, shareholders are going to appoint the auditors. Auditors will come and check the prepared financial statement. They will come and check whether they are prepared properly, whether the directors have done any mistakes, any frauds. Guys, these auditors are independent parties. They are not dependent to anyone. They will only speak the truth. Okay, they are very independent. They are not dependent to anyone. Okay, so guys, see here, they will come to the company and they will check whether the company has the board of directors have done everything properly. Now, guys, board of directors are responsible to prepare financial statement. Who actually prepares financial statement? Board of directors has the responsibility to prepare financial statement. Who do you think who actually prepares? Very good. Accountants. Guys, accountants, the employees. Okay, if I was to specify, the accountants. Guys, the accountants are the ones who will prepare the financial statement. The responsible person is the board of director. Board of director will appoint accountants and ask them to prepare. Now, let's say the accountant does something very big mistake. Who will be accountable? Board of director or the accountant? Who will be asked questions? Will the board of directors, they ask question, or will they ask question from the accountants? Board of directors. Because guys, board of directors has the responsibility to prepare the accounts. Even though the accounts is actually prepared by the accountants, okay, who is responsible? Responsible is board of director. So now auditors will come and check all the accounts, guys. They will see if there are mistakes, there are frauds. Guys, they will, after that, what they will do, they will give something called an opinion. We call it an audit opinion. So the board of directors will give something called, guys, an audit opinion. What does an audit opinion means? They will say whether the financial statements, accountant employees, yeah, they are one type of employees. There are so many types of employees. So guys, an auditor will give an audit opinion. What does audit opinion means? Guys, they will say whether the financial statements, write everything down, okay? Write everything clearly. They will say, guys, whether the financial statements are true and fair. Okay, they will say, they will give an opinion saying that whether the financial statements are true and fair. Who will they give the opinion to? Who will they give the opinion to? Who do you think they have to give the opinion to? Guys, they are going to give an opinion saying that whether the financial statements are true and fair. They will give the opinion to shareholders because shareholders no appointed them. Shareholders only appointed them. So they are accountable to the shareholders. So they will tell the shareholders, look, with these information are true and fair. So guys, these are external parties. They are not internal. They are outside the business. After they prepare financial statement, they will come and give an opinion. We call it an audit opinion. We call it, guys, an audit opinion. Means then auditors are level above the shareholders. Is nothing like that, level above or below. They just come after the financial statements are prepared. They will just come and check properly one by one. They will check properly and they will find out if there are mistakes. They will find out if there are frauds and they will give an audit report. In the audit report only, they will say the opinion. They will say financial statements are true and fair. Clear? So are they employees? No, auditors are not employees. Guys, they are external. They come once a year and they check it and go. Clear? So guys, see here, yes, auditors are external. They will not, guys, they will not support anyone. You might think, okay, they can support the directors. No, guys, in the past, there are situations where the auditors have done frauds together with the manager and they have become bankrupt. They have to pay money. They had to go to jail. So it's a big thing. Auditors have to be independent. They cannot support anyone. They cannot be bribed or anything. Okay. So if you want, guys, take a screenshot and write this properly in your book. Okay. Now see here, let's go to the next part. So external auditors, guys, why do they, how are auditors appointed? Shareholders, they will appoint auditors. Okay, so now guys, external auditors to provide opinion on financial statements. So the auditors will provide opinion. They are the one who is going to say whether the financial statements are true and fair. They will tell, guys, whether the financial statements are true and fair. This is how they are going to give the opinion. They will say whether the financial statements are true and fair. Remember, auditors are independent. They don't depend on others. Auditors are appointed by the shareholders. They have to report to the shareholders. They will give the audit report to the shareholders saying the opinion on the financial statements. Guys, so far, this is what you need to know. Okay, guys, just check whether you have understood everything clearly. I'll ask you questions, be ready. Okay, I'll ask you all questions, be ready. You all can unmute and answer. Okay, I'll give you 5 minutes, quickly go through it. So guys, Mike, will you tell about your class? Hasna, we will study that one by one, dear. Will you tell about your class? My class will be on Tuesdays, guys, from 4 o'clock. Most probably first few classes will go up to 6 o'clock, but later when we are going to do a lot of questions and all those, it will become 6:30. Okay, you will have extra classes, and usually after we do the second chapter, guys, every week you will have mock exams. You can ask the seniors, guys. You can ask your seniors who have come to my classes. What I do is every week I keep mock exam. I give questions. You all have to do that and send the answer. And then, guys, I will send the answers. You have to mark it and put marks. So I just do that to make sure that you all are in touch with the how to do questions, because accounting knows no use of just studying the theory if you don't know how to attempt. And then after that, I will be keeping, like schools, I will be keeping physical term exams. So now for the students, 2023 students, this 13th, they are going to have their second term exam. Like it's like a real exam. They have to come and do and then mark the papers. They will get the marks. So like that, every term you all will be having a physical exams. Okay, even if you're an online student, you will have physical exams. If you're an outstation student and if you are finding it difficult, then you have an exemption where you can do the exam online. Okay, yeah. So, and then what else? What else do you all have doubts? Soon ask me before I explain the other part. Everything will be taught from the basics. Guys, everything will be taught from the basics. Where will you keep the physical exam? Most probably from, usually I keep on in Kalanawa. Sometimes I might keep in this side as well, that is Bambalapitiya or something. Okay, most probably I keep. Do we need exercise book? Yes, you need exercise book, guys. Okay, so what else? So guys, see here, everything will be taught from the basics. Guys, see here, even if you haven't studied O-levels, commerce, no worries. Okay, no worries. We will be teaching from the basic, guys. I haven't done O-level commerce. When I was studying my A-levels, I didn't do O-level commerce. It's not going to have a big impact. If you are a student who haven't done O-level commerce, or if your O-level results is going to be very low, don't worry. Because guys, O-levels and A-levels are totally different. O-levels and A-levels are totally different. Because guys, see here, O-levels is very easy. When you compare to A-levels, everyone becomes the same. Okay, at first, even when I was in my A-levels, I was very scared. At first, I thought, okay, others have done O-level commerce. I haven't done O-level commerce. So I was very scared. But then later, I realized, guys, I studied from the first because I was scared. I don't know commerce. But then later, guys, I actually got 4 A's. I'm telling you all this just to make sure you all understand. You don't have to do O-level commerce for you to get good results in A-levels. A-levels and O-levels are totally different. Every subject in A-levels, they will be teaching from the basics. How many pages for the exercise books? You can just for now take 200 page. Don't take square rule, just take single. Okay. Yeah, it's 3 A's. I mean, with English, I told. Okay, so yes, Afifa. So guys, can I continue, please? Okay, so guys, I will ask you all questions. Be ready to answer. So if you know the answer, you all can raise your hand. I'll tell you all to unmute. Okay, how many subjects you have to choose for A-levels? 3 subjects. Okay, 3 subjects. So fine. We'll ask. Wait, okay. We'll ask, why does the government need information? Who knows the answer? Why does the government need information? Okay, Shabnam, why? Why does the government need information, Shabnam?
Impose tax on profit.
Yes, guys, they need information so that they can impose tax on profit. That's the main thing. Okay, should we copy these notes on our writing books? No, guys, you can take a printout. That's enough. If you're joining my classes, you will get the book. Okay. Now let's go to the next one. The next question, Rasma, you can tell me why does financial institutions need information? Financial institutions?
To know whether is the business able to repay the loan and interest.
Very good. Whether the business is able to pay the loan and interest. Okay. Halima, can you tell me why does who else should we ask? Auditors, Halima. Why does auditors need information? Soon, tell me.
To provide opinion on financial statements?
Yes, to provide an opinion on financial statement. Okay, what else didn't I ask yet? Trade receivable. William, trade receivable. Why does trade receivable needs information? Yes, quickly answer. Why does trade receivable needs information? Okay. Anyone who can answer?
To supply goods and services.
Okay, guys, trade receivers need information to supply to make sure that you have a continuous supply of goods and services. Okay. Yes, you have to do general English for your A-levels. You have to do. If you want to go to university or anything, however, you have to do. Okay. What else? Trade payables, Latifa. Trade payables. Why does trade payables need information?
Supply goods.
Sorry? Trade payable, dear. Izza, why does trade payable need information?
To make sure that we would pay the credit the same like the money for them.
Yeah, we should to make sure that we are going to pay the money for the goods. So guys, you need to know this. Make sure, guys, after every class, you study at that time itself. Don't keep it for tomorrow. That will never work. Always make sure that you study then and there. So guys, that way That way, guys, you will make sure that you are 100% clear and that you don't have to spend more time also, guys. Within 24 hours, when the lecturer has taught, within 24 hours, try your best to study that, make short notes and clear it. Okay, so that way, guys, because A-levels, every single day, you will get a lot of notes. Okay, you will get a lot of notes. So because of that, you will find it very easy. Unless you study daily, you will find it very easy because your notes will keep on increasing every single day. So for that only, guys, I'm telling, make sure that you study on time so that later you don't regret. Okay, so guys, shall I continue with the new part, or what do you think? Or yes, Salman. Guys, if you have any other doubts, just ask me. Yeah, with the general English only, I said 4 subjects. Okay, with the general English only, guys, I said 4 subjects. Guys, not tomorrow. If you want, I can keep another session, but when can I keep? I have no time. If not, I can keep. Okay, guys, see here, types of accounting. I'll just explain the first few parts. See here, guys, types of accounting. There are 2 types of accounting. We say, Miss, will you do in Shakti Institute? Most probably, I will start maybe next month or the other month. Okay, because of world crisis, guys, I don't want to start now, but I will be starting in Shakti Institute very soon. So far, I have started at Syntax Colonava. Okay. So most probably I will start there as well. Now, guys, see here, types of accounting. Guys, accounting has 2 types. We say financial accounting and management accounting. Okay, financial accounting is where you are going to provide what type of information? You are going to provide financial information. Financial means, guys, only monetary terms. Only in terms of monetary terms, those types of information you are going to provide. To whom you are going to provide, guys? To the external stakeholders. External means the people who are outside the business. External. So that they can make economic decision. Guys, accounting is divided into 2. The accounting is divided into 2: financial accounting, management. Financial accounting is where you are going to give information, not just information, only financial information. Financial means in terms of money. Whom are you going to give? You are going to give, guys, to the external stakeholders, the people who are outside your business, so that they can make economic decision. Okay. Now, guys, if to get an A, you should get above 75. No, because one student is asking, I'm telling. Guys, management accounting. Management accounting is where you will provide both financial and non-financial. To whom? To the internal stakeholders. We say management, so that they can make decision. Guys, you all have to tell me which is financial, which is non-financial. I want you to tell me. When I say, now I have bought a machine. I have bought a machine. The cost of the machine is 1 million. 1 million. Okay. Guys, let's say this is printer. Okay. A printer machine. Let's say, guys, the capacity. The capacity of this printer machine, I can print, let's say, 10,000 copies. 10,000 copies. Guys, tell me which is financial information, which is non-financial. No, is not like that, dear. Which is financial here,
Financial
which is
information cost. Non-financial is copies.
Yeah, the capacity. Guys, see here, financial information here is the cost. Non-financial is the capacity of the machine. Guys, if it is financial accounting, you will only give financial information. You will only tell about the financial side of the information. If it is management accounting, it will include both financial and non-financial. Clear? So guys, if I ask you these 3 questions, can you all answer me? If I ask you these 3 questions, you should be able to answer. Now, there are 2 types of accounting, financial and non-financial. Okay, so you all have to answer me. There are 2 types of accounting, financial accounting and management accounting. Okay, can you all answer me? If it is financial accounting, what type of information you give? Financial accounting, what type of information will you provide? Yes, quickly tell me. Yes, financial information. Guys, if it's financial accounting, you provide financial information. If it's management accounting, what type of information do you provide? If it's management, very good, both. You will provide both financial and non-financial. Okay, both monetary and non-monetary. It will be both financial and non-financial. Guys, what about the stakeholders? Who are the stakeholders you give for financial information? For whom do you prepare? External. Guys, if it is financial accounting, you will prepare for external stakeholders. External. If it is management accounting,
Internal.
no.
Internal.
Internal. Management accounting, guys, you will prepare for internal stakeholders. We usually say the management. Okay, in internal, guys, the main person is the management. We say we are going to give information for whom? For the management. Guys, why do you give them? Why? For financial and management. Why? To make decision. Guys, for both you give so that they can make economic decision. To make economic decision. So guys, remember, when it comes, if they ask you what is financial accounting, okay, financial accounting is where you provide financial information. To whom? To external stakeholders. Why? So that they can make economic decision. If it's management accounting, guys, you will provide information, both financial and non-financial. To whom? To internal stakeholders. Why? Usually we say management. Why? So that they can make economic decision. Guys, are you all clear? Now, I'll tell you with examples. Now, guys, think you're a business. Okay, in the business, you're buying a printer machine. Will you tell the users, will you tell your customer, hello customer, come here, this printer, we can photocopy, we can print 10,000 copies. Will you tell all your customers, here, look, will you tell your government, we can print for 10,000 copies? Are you going to tell them? No, right? You're not going to tell them. That's useless. They don't need those information. But guys, for the manager is the person who will decide whether to buy the printer or not. Okay, so guys, see here, if you are a manager, now guys, as a manager, guys, you need to know whether to buy the printer or not. For that, you need to know, obviously, not only the cost, you need to know how many copies can this printer print. Okay, as a manager, you have money. You want to decide whether to buy this printer or not. For that, you need to know how many copies can this printer have. Okay, so guys, for that, you need financial and non-financial. But if you are an external stakeholder, you will not need non-financial information. You will mainly need, guys, only the information in terms of money. You will need to know how much is the cost of the machines. In this business, what is the cost of the machine? Okay, customers are external. Customers are outside the business. Okay, so guys, this is the difference between financial accounting and management accounting. We have so many differences in your exam. They will be testing one by one. Guys, after each chapter, I will be doing at least 5 past papers. so that you know how to face your exam. So now see here, you know, now itself put it in your head. Financial accounting is where you provide what information? Financial information. To whom? External stakeholders. Why? To make economic decision. Management accounting, you provide both financial and non-financial. To whom? Internal stakeholders, or we say the management, to make economic decision. Okay, so no, both you can say economic decision, even though I haven't put here economic. Both people, anyone will make economic decision. No, anyone likes to get best return, right? No one will like to get a little return. They want to get the best return. Economic means you're trying to get the best return in your decision. By making your decision, you will always try to get the best return out of it. So guys, financial accounting, it prepares, we say, underline general purpose financial statement. Financial accounting prepares general purpose financial statement. What does general purpose mean? General purpose means, guys, you are making sure that you are giving everyone information equally, generally, in common. You're not being biased. You're not trying to just satisfy the customer. You're not just trying to satisfy the government when you're giving the information. You're making sure you are trying to satisfy the basic needs of information of all the stakeholders. The common needs of information of all the stakeholders, you will try your best to satisfy. When it comes to financial accounting, we say, guys, we provide what information? General purpose financial statement. This is always tested. In the past paper, they have tested this. Okay, so remember, financial accounting, you prepare what type of financial statement? General purpose. General purpose means, guys, you are trying to satisfy the common needs, the basic needs of everyone equally, generally. Okay, not just you're trying to be biased, you're making sure you're satisfying everyone's common needs of information. But guys, management accounting, we say specific purpose financial statement. We prepare only specific purpose. For example, I am the manager. Okay, so now I need information. I'm telling y'all are my employees. Okay, so what I do is I tell, okay, let's take one person. Okay, so I tell here Safia Karim, please, she's my employee. So I call her and tell, Safia, can you quickly prepare me a statement? She will ask me what statement. Then I will say, I want to buy this printer. Can you make sure you give all the information about this printer in as a statement? So guys, Safia has to prepare me at that time itself. So is she trying to satisfy everyone, or is she trying to satisfy the manager alone? She's specifically preparing it for me, right? Just because I asked her. Yes, guys, just because I asked her, she's trying to satisfy me. We say specific purpose. So she will only satisfy the manager here. She is preparing what type, guys? Specific purpose financial statement. Specific purpose means it will only satisfy one special purpose. Okay, now another example. Guys, government, they will ask tax return files. Okay, the government will ask tax return files, for example, to see whether you're paying the correct profit. Okay, so then guys, you will specially prepare a statement which is only the government will need it. So you call it specific purpose. You will only specially satisfy one purpose. Okay, so general purpose is you're preparing one statement which is common for everyone, equally satisfying everyone. Management accounting is where you will specially prepare for a specific purpose. Usually when the manager asks you to prepare a statement, you have to prepare, guys, based on the requirements of the manager. We call them, guys, specific purpose purpose financial statement. Now we will quickly go through these differences. After that, we are done for the day. Okay, guys, so they will ask you what is the difference between financial accounting and management accounting. Now, you already know, but there are certain items which I haven't taught yet. Okay, now see, they will, in your A-level final exam, they will give you this basis and they will ask you to type this. They will ask you to write whatever given here. Okay, so that's how they test you in your final exam. If you want, I can show you past paper questions, how they test these types of questions. Okay, now they will ask you, who are the users of information? Guys, financial accounting. Who do you prepare financial accounting to? External or internal people? Mainly, who do you prepare? External people or internal?
External.
External. Guys, financial accounting, you mainly prepare for external people. Don't you think internal people can use them? Cannot, can't. What do you think?
Can.
Can, guys. You prepare for external, but understand you're the one who is preparing for the external people. Can't you use your one? You can, right? But if they ask you what is the main purpose of financial accounting, you should say external. But who can use it? Both can use. Internal people also can use. External people also can use. But mainly for who? External. Mainly for external, but both internal as well as external can use it. Guys, what about management accounting? Management accounting, only internal people can use. It's like the secret of your house, guys. Your house secrets, you're not going to tell it for everyone, right? You're just your siblings and you might know it. You will keep inside the business. So management accounting, you're not going to tell it to the outside people. Let's say, for example, your future plans. Let's say you're going to start a very good profitable project. Will you tell it to external people? No, you will keep inside the business. Okay. Nature of information. Nature means, guys, you're going to see, okay, are you giving past information or information related to the future? Guys, financial accounting, you give it to external people, right? So when you give it to external, you're not going to talk about the future. You will always talk, okay, what happened in the past? What is the profit you earned in the past? What is the loss you have incurred last year? What is the asset last year? What is the liability last year? You will always talk about the past. If you want, write it down, guys. Historical means past. Historical information means past information. So guys, financial accounting, you always provide information related to the past, not the future. But guys, as the manager, you will always think about what? Your future. Guys, management accounting, they always think about the future. What is the information you're going to give it in the future? We say forecasted, budgeted. Now, guys, as a manager, you will always think about the success of the business, right? How am I going to become successful in the future? Last year, I had a sales of 10,000. Next year, how am I going to increase my sales to 30,000? You will always think about the future. So guys, see here, for the manager, they will always think about the future, but to think about the future, they will need past information as well, right? They have to see, okay, in the past, my profit is 10,000. In the future, I have to get 20,000. So guys, what type of in management accounting, you will have both past and future, but mainly future. As a manager, you should always think about the success of the business. So you will always be future oriented. Guys, what about the legal requirements? Legal requirements means, guys, the rules and regulations you have to follow. Guys, financial accounting, you give it to external people. So when you give it to external people, obviously you have to follow rules and regulations, right? Then only the external people will trust you. For the external people to trust your information, you have to follow the laws. You have to follow the rules. Then only they can believe that you have given proper information. Okay, but guys, if it is management accounting, it's something inside your house. I'll tell you an example. Guys, when you go to your school, you have to follow certain rules and regulation, right? But when you are outside, when you are inside your house, you don't follow rules and regulation how to sit and sleep, right? But if it is school, you need to know how to sit and respect the teacher and stuff. Same like that, financial accounting is like your school. You have to follow the legal requirements. But if it's management accounting, not like that, guys. You don't have to follow any laws or any rules. You can prepare the way you want. But when you're preparing financial accounting information, you should make sure you follow the standards, the rules and regulation. But if it's management accounting, you can prepare the way you want. As frequency of reporting, when are you going to give the information? If it's financial accounting, you have to give only once in a year. We call it annually. Every year, only once you have to report to your external users. You will tell them, listen, external users, this year our profit is this much. This year our sales is this much. You will only report it annually. But guys, management accounting, like I told Safia, prepare me a statement right now. Guys, whenever the manager asks to do, you have to do. It can be today, tomorrow, anytime. Whenever the manager asks to do, you have to do. That is what, guys, management accounting means. Whenever the manager asks you to prepare a financial statement, you should prepare. But if it's financial accounting, only once a year. And then we study types of information. If it's financial accounting, you only give financial information. If it's management accounting, both financial and non-financial. Okay. Level of detail. Guys, level of detail. When it's financial accounting, you will give summarized information. Guys, just think 365 days. All these 365 days, if you try to write it in the book, do you think the users will read it? Do you think the users going to read everything? No, you have to give as much as summarized information. So guys, all these 365 days information, you will just make it in 5 to 10 pages. You will make it in 5 to 10 pages and give this information. Very summarized so that the users will find it comfortable to read. But guys, for the managers, can you give summarized information? Can they make decision if you give summarized information? No, you have to give every single detail. You have to tell one by one to the managers, then only they can make day-to-day decision. So remember, if it's financial accounting, you give summarized information. Management accounting, you will give details so that the managers can make day-to-day decision. Guys, if it's financial accounting, you need auditors. I told you here, you will need auditors, because then only, guys, auditors will come and check whether the financial statements have been prepared properly. Then only, guys, they will give it to the users, all the financial statement. After the auditor checks only, guys, we will share it among the users. So yes, you need, by then only it's a protection, guys. If not, the managers can do frauds. So then you need auditors to protect them. So that's auditors to protect the shareholders, the users from these managers. They can do so many things. But guys, management accounting, you don't need auditors, because management accounting information they use inside the business. They are not going to give it to anyone else. They will use it inside the business. So you don't need auditors, guys, because when you give it to someone outside only, you should make sure you're giving correct information, right? You should make sure you're giving true information. So if you are using for yourself, you don't need auditors. Okay? Structure. Guys, if it is financial accounting, you will just give only once. For the whole company, you will only make one financial statement. You're not going to prepare for each department, production department, marketing department, human resource department. You're not going to prepare each department financial statement, right? For the whole overall organization, you will just prepare one. For the overall organization, you're just going to prepare one financial statement. But guys, if it is management accounting, for each separate, you are trying to give detailed information as much as possible, right? For production department, you will say how much is the cost. For marketing department, how much is the cost? Human resource department, what is the cost? For every division, you will tell the cost and all the details separately. Okay, so but if it is financial accounting for the overall organization, you will just give one information. Clear? So one student wants me to explain the legal requirement once again. Legal requirement is whether you're following laws and regulation, the standards. Guys, if it's financial accounting, you give it to the external people. So the external people should trust your information. If they have to trust your information, you should make sure, okay, you should make sure that you are giving correct information. The information to be true, okay, for that, guys, they have to follow all the rules and regulation. You will study in the future all the standards. When you prepare a financial statement, you have to follow these standards. If you want, guys, I can show you. Okay, now if you are preparing financial accounting, if you ask me, guys, in your A-level syllabus, all these are financial accounting. In your A-level syllabus, what I'm coloring here, guys, all these are financial accounting. Okay, so almost 70% of your A-level syllabus is financial accounting. Okay, few part only management accounting. So guys, if you want me to show, now when it comes to financial accounting, there is a standard. The standard says the formats. Those are the formats you have to draw. You cannot draw the way you want. Okay, they have given specific standard formats. You have to follow the formats when you're preparing company accounts. You will do in grade 13. Company accounts. So when you prepare company accounts, guys, see, this is the format. There are specific formats given. These formats you have to follow. Okay, don't get scared now. So these are the formats you have to follow when preparing company accounts. So these are the legal requirements. I hope you're clear. Okay, no, Milhan. In O levels, you haven't studied management accounting. So now see here, I hope you're clear now, dear. But if it is management accounting, you don't have specific formats and rules and regulation to follow. Okay. Now, guys, see here, that's it. Is there anything else you want me to explain further? Even for the physical class, I did up to here. So I think we can stop it. Okay. A requirement of auditors. Auditors are the people who will come and give you the opinion. They will come and tell an opinion on your financial statement. They will say whether the financial statements are true and fair, whether you have prepared it properly. Because if it's financial accounting only, no, you give it to external people. So then only you need auditors, right? If you are giving it to the people who are inside the business, you don't need auditors. So that's why you need auditors. External auditors, these are the people after you prepare financial statement, they will come and check whether your financial statements are properly prepared. If there are any frauds, they will tell. So they will check one by one and see if you properly prepare. So if it's management accounting, guys, you don't need auditors. Only if it's financial accounting, you need auditors, because management accounting information is used by the internal people. So why do you need auditors if it's used by the internal people? Okay. So I hope all of y'all got it cleared. Okay, structure and nature. Nature means what type of information you give. If it's financial accounting, it's about past. In financial accounting, you always give information whichever have already happened. For example, see here, this is where you find the profit. You will say for the year ended 31st March 2019. Whatever happened in the past, you will give them to the users. You will say, okay, the profit is 21,622. Sales is 88,000. Already happened, but only you will give. Yes, Salman, you can get it as, if you're near, you can even come and get it. Okay, but if it's management accounting, you will not only give past information, but information about the future as well. Past and the future. Clear? The structure means, dear, when you are giving information, now let's say there are different organizations, different departments. You have marketing department, production department, human resource department. There are different departments in a company. Okay, now when it comes to financial accounting, you don't separately give financial statements for each department. You will make sure you report as one. You will report the business as one. You are not going to separately report one by one. As a whole, you will report the business. But if it's management accounting, for each department, you will say how much is the cost of this department, how much is the cost of this department. You will separately report for each division, one by one. You are going to report separately. Are you clear now? Okay, so guys, we can stop it here. If you want to continue to my classes and if you want any information, guys, you can message to this number to get any information further. So guys, I hope you got use of this class. We will continue it next Tuesday, all other part. Okay, guys, let's stop it here. If you have any doubts, just make sure you ask. Okay. Welcome, guys. Thank you for joining. Take care.